Hello, fellow traders. A question that I get asked an awful lot is when to clone the Taylor trading zone. And so here is my chart as I set it up on Monday, April 28th. And you see the trading zone set up here, and I'm going to show you where I get the numbers. And it's my Taylor calculator. And the numbers were derived from the Friday's calculations, 56.05 for resistance, 55.16 support. So I drew that out of my chart from 9:30 a.m., you can see them here, 9:30 a.m. to 1600 hours. And so I draw out the trading zone and I put a horizontal line on my chart to indicate the previous day's close. And I always enter that on my chart as well. But I want to concentrate on the question of when to clone the trading zone. And here, just before the market opened, at 8:30, I'm going to take you through it and I'm going to explain how you can look at the trading zone, look at prices, and determine when or whether to clone the trading zone. And so let's go on a 3-minute candle, and here we go. Prices open up right at 55.60, go down to the previous day's close, and here we are just at 10:51. All right, here's 10:51. Prices traded up just after the open at 55.77, went down to the previous day's close, which is of course equilibrium. The gap trade, as you know, that I speak about often, and stayed around here for, let's see, 10 o'clock to 10:51, so almost an hour. And so, do we clone the trading zone? Well, here we have a intraday high put in at 55.78. And so the trading zone, the range for the day, and I'm going to go back to my calculated trading zone, the range for the day for Monday was 89 points. All right, 89 points. And so that's the range from 56.05 to 55.16, 89 points. And so here at 10:50, do we clone the trading zone? Do we trade it all? Well, if the trading zone, if prices are going to traverse 89 points, they're going to traverse 89 points either from the intraday high or the intraday low. Now here the intraday high was put in right at 55.77. And so if I clone the trading zone to the intraday high, let me clone that. And I move the clone down to the intraday high, right about over here. And that's an indication of where prices are likely to trade for the rest of the day. And so prices could go down here to 54.91. Is that where prices are going to go? Now, we don't really know, but we can take a guess. In order to trade above it, if the prices were going to be cloned up from the intraday low, which was right here at 55.39, and let me do that. I'm going to clone the trading zone again. Prices would trade up to, what's this, 56.30. All right? So are prices going to close around 56.30, or are they going to close around 54.90? Now prices put in a high right over here at 55.77, and the smart move was to trade to the lower end. Prices typically were going to trade down. Why do I know this? I really don't. You don't know either. Nobody knows where prices are going to go. Except prices are going to trade in an 89-point range. And here they've only traded in a relatively narrow range. And so if prices are going to trade up over here to 56.30, then prices would have to take out this high. And if they take out this high, then we could say prices are going to trade up to 56.30. They're not likely to. Why? Because prices have traded at 55.77, and haven't come close to that through the rest of the day at 1050. So I'm pretty sure prices are going to trade down to here. And I'm going to place a trade, and I suggest you can place a trade down here at 54.90. Betting prices are going to go down to 54.90. And so let's see where prices actually did go. Now remember, if prices are going to move the opposite direction, they're going to take out this high at 55.77. And so this is our point that we're going to close the trade. And so I'm saying that because prices put in a high early in the day, around 55.77, and didn't even come close to it, they're likely to trade down to the 54.90 point. So I'm going to remove the upper clone, and I'm going to maintain the lower clone, and assume that you get on a trade at 55.55, somewhere around there, and let's go throughout the day. Here's how the rest of the day progressed. And we get off where prices traversed our 89-point range, all right? Right over here, as you can see, prices traded down to 54.92, put in the 89-point range. I think it was 88 points, but nevertheless, the calculated trading zone forecast an 89-point range. Prices traded down in that 89-point range, 88 points, but nevertheless, the trading zone was accurate, as it normally is. The only question is, do we clone it to the intraday low or the intraday high? Here, I cloned it to the intraday low, took a trade down to here. Very nice trade from 55.55 to 54.90. All right, so that's about a 65-point trade. Not too bad in anyone's book. Let's go further to Tuesday. So I hope that I answered that question somewhat in determining where to clone and when to clone the trading zone. All right, let's move on to the next trading day. Now here we are at 8:30 on the next day, April 29th, on Tuesday, and prices were coming in an hour before the market opened, just about at the previous day's close, which you can see is at 55.52. And so prices are coming in at 55.52, and I'm going to take you through it just before the market opened. Okay, I'm going to stop it right here. I've made many videos about this particular happening, and when the prices are coming in right at the previous day's close, at equilibrium, and just before the market opens, they dive down or they rise up, that's an indication that the market is being taken down to be taken up, or vice versa, in order to close the gap. And that's exactly what happened on Tuesday, April 29th. And so the trade was the gap trade, and I'm going to show you exactly what I'm talking about. Prices moved down, and they moved down for no particular reason. Why did prices move down here? They're coming in, they're relatively steady throughout the pre-trading hours, and just at the market open, they dove down here. Why? Absolutely no reason. The only reason was to close the gap, to give the traders something to play with, some room to play with, some volatility. And here it is. Prices opened up right over here. As you can see, 55.31. I'm going to take you through it. Moved up, closed the gap, stayed around here. This is the trade. This is the gap trade. This is about a 12 or 15 point trade, and that's fine. If you made that 15 points, you can basically make $750 on the E-mini, and why stress? Close your computer, go home, all right? Prices are opening up just about at the gap at the previous day's close, right in the middle of the trading zone. So where is it going to go up or down? Who cares? Who knows? We don't know. You made $750, go home, enjoy it, all right? So that's my video for today. So I've demonstrated in one instance when to clone the trading zone and in what direction, and in another instance when prices dive down just prior to the market open, or they rise up just prior to the market open, and for no reason, only to be taken down or to be taken up. So thanks so much for watching. That's my video for today. Marv Eisen for Timeless Dollar Trading. and I'll see you in my next video.